in late summer, early fall, that's when we stumbled upon ELF. And what was actually the catalyst for us looking at it, one of our analysts got curious because they'd read an article, there were a bunch of articles in February of this year comparing ELF's stock performance to that of NVIDIA and showing that ELF had actually outperformed NVIDIA for 5 years. And so there was all this hype around the stock. And so our analyst, this is strange. This is just a cosmetics company. You know, the other company is an AI company, and I get that. So first thing they did was pull up import data, just, you know, kind of whatever, just to see, and saw that the imports had crashed starting 3 quarters ago, had crashed by 2/3 from the prior quarter, and yet sales had maintained and inventory was building. So it was an atypical situation for us because normally with a short, we'll have a sense of where the problems are, but we have to dig to really understand them or flesh them out. But here, the problem was staring us in the face, and so the question was, what are we missing? Like, can this be this obvious?
But I mean, they previously said that the recent buildup in inventory was intentional, right? Because they were getting ready for an increase in customer demand. So why don't you believe them?
So what we think happened, okay, so they're on a March fiscal year. So if you go back a little bit, about 4.5 quarters ago. So we think Q2 fiscal 24. They were expecting a lot of sales, and they had built up inventory in anticipation of that. And we think that sales must have hit a wall in Q2 of 24, fiscal 24, and they got stuck with a bunch of inventory. So they then told the market when they reported numbers and the inventory had gone up significantly, they said, well, most of that bump is because we've changed the way that we're sourcing inventory. We're now taking ownership of the inventory in China, and so now we're showing another 37 million in inventory on the water that we previously wouldn't have shown. Now, our research leads us to conclude that that was a completely false statement, that they have long generally taken ownership of the inventory on the China side. So their accounts, their inventory accounting should have always been consolidating the on-the-water inventory. So what happened then, so now they have this excuse. I don't think the sales really picked up for them in Q3, fiscal Q3. So by the time they got to fiscal Q4, I think they slammed on the brakes in terms of buying new inventory because they're trying to run down the existing inventory. But even after the imports cratered by, again, 2/3, which that pattern has held for 3 quarters, their inventory balances keep climbing. And since about 80% of what they sell in the U.S. is imported from China, it seems like these two things cannot both be true. You cannot have 3 quarters of crashed imports and rising inventory levels.
So we have sent many emails. We are trying to also, I need to, you know, this is a big disclaimer. We're trying to get actually the ELF side, which we haven't heard anything back yet. But have you had any engagement with the company itself of regulators after your announcement of short selling yesterday?
Okay, so we don't comment on discussions with regulators ever, but or whether they've occurred. But in terms of ELF itself, a lot of times when we're looking at a company, we will speak with the company. Now, we don't say we're muddy waters, because if we do that, we're obviously not going to get the version that every other investor in the market gets. So we have spoken with ELF's internal IR, and we've asked questions. And
yesterday, after the short selling, or before?
Prior to it. I mean, so we asked about the taking title on the China side, and we received basically, we asked them to follow up by email, and because there was no good answer on the call, and the email we got back was a word salad about like, yeah, we just changed the timing on it.
What's your price target?
We don't do price. I mean, the problem is like just. Because I don't want to make it sound like I'm copping out here, but when you know that a company's accounts are problematic, okay, when you can tell that from the outside, it's really not possible for us to know the full extent of the problems. So I can seldom sit here and tell you about a company that we're short. Like, this is what I think the real financials are. So we think they've over the past 3 quarters, we think that they've overstated probably somewhere from 130 million to 180 million of revenue. I can make arguments as to why that's conservative. I would think that this could have predated The period that we're able to identify, I don't know. So when there's rot, when we perceive rot, we just can never tell how far it goes from the outside.